Okay, now let's take a look at how to prepare different types of budget. So we have different types of budget that will make up the master budget. So like I told you before, master budget will comprise of three things. The first one is the cash budget. The second is the budgeted income statement. The third is the budgeted balance sheet. So in order for you to prepare these three master budget formula, you need to have the details of the components of the master budget. So the first component that we have for the master budget would be the sales budget. So sales budget is basically calculated by taking the budgeted unit sales and multiply by selling price per unit. So the information is given to you there according to quarter, and then the selling price is 18 ringgit per unit. So you just transfer to the first part of the sales budget, in which you transfer the budgeted unit sales into respective quarter, and then you apply the selling price per unit 18, and then you should get the total sales for quarter 1 198,216 in the second, and the rest. And then the second part of the information given to you is that when you do sales, you want to collect the money from your customers, and the expectation of the collection of money would be 65% of the sales will be collected in the month of sales or in the quarter of sales, and 30% will be in the following quarter. So for example, if your total sales in quarter 1 is 198,000, only 65% will be collected in the current quarter. So you will have the first quarter 128,700. Where do you get that figure from? So the reference shows you how to calculate it. So you take 198,000 of total sales in the first quarter, and then you multiply by 65%. That will give you 128,700. And then 30% of 59,400 ringgit will be collected in the second quarter. So the same goes to the second quarter total sales, 216,000, in which 65% of the total will be collected in the current quarter, and 30% will be collected in the next quarter, which is the third quarter. And you just apply the same way. And you will get all the information there by applying the same calculation formula. Now let's move to the production budget. So you want to know how much is the required production. So that will be based on the planned production basically, in which you're going to take the expected sales plus the ending inventory and then minus the beginning inventory. So information is provided to you on the left hand side, and then you just need to transfer the figures into this particular format. So you will have the sales according to quarter. You just directly take the figures of the budgeted unit sales, and then you plus with the ending inventory, and then you minus with the beginning inventory. That will give you the required production or planned production. 14,500 in the first quarter, 22,500 in the second quarter, and the rest goes. Right. But bear in mind that your beginning inventory of 8,000 is given. So it is based on the information provided, and you just need to minus. And bear in mind, your ending inventory for first quarter will become the beginning inventory of the second quarter. And your third quarter and beginning inventory will be based on the second quarter ending inventory. So you're going to take the ending inventory of the last quarter to be the beginning inventory of the current quarter, something like that. Direct labor budget. So we have, for example, information that a company, ABC company, is producing product A, and then in the first quarter you're going to produce 5,000, in the second quarter 6,000, and then the machine operator hours will be 0.1 hour. So if you're going to produce 5,000 in quarter 1, the total machine operator hours will be 500. So you just take 5,000 multiplied by 0.1. And let's say if you also engage the laborers, so you just need to take the product A units 5,000 multiplied by the labor hours of 0.05, that will give you 250 labor hours. So once you get to calculate how much is the total machine operator hours, how much is the total other labor hours, and then you just apply with the rates given. All these will be given, don't worry. And then that will give you the total machine operator hours and also total labor cost. Not total machine operator hour, but total machine operator cost. So 12,500 and 3,750, you add these two, that should give you the grand total of direct labor cost of 16,250. So you just need to apply the same way in the rest of the quarters. Right, now direct materials budget. So the formula that we use to calculate the raw materials required for production to be purchased will be based on how much production that you expect to have. And then you add with the ending inventory balance, and then you minus with the beginning raw materials inventory. For example, if you want to produce product A, 5,000 units in quarter 1, and the direct material, in this case, we call it as resin or unit in pounds that you require will be 2 pounds. You know, so the total resin needed will be 5,000 multiplied by 2, 10,000. And then you will have information given to you, how much is the ending inventory, how much is the beginning inventory. So you just add ending inventory, that will give you total resin required, and then you minus beginning inventory, that will give you resin to be purchased. And then how much is the cost? The above part all in units. Now you need to convert into ringgit sign. So you just need to know how much is the cost per pound. So 50 per pound, and then take 10,400 multiplied by 0.5, and then you'll get 7,200 ringgit, and apply the same way in the rest of the quarters. Now, manufacturing overhead. So the budgeted direct labor hours, because most of the manufacturing overhead budget will be based on the direct labor hours. So the direct labor hours are given to you according to the quarter. So you just need to transfer the information there. Budgeted direct labor hours, 8,000 for quarter 1, 8,200 for quarter 2, and so on. And then the variable manufacturing overhead rate. So some overhead will be variable, some will be fixed. So you need to calculate the variable first. So the variable manufacturing rate per unit is 3 ringgit and 25. So that will give you total of 26,000 ringgit variable manufacturing overhead. And then fixed manufacturing overhead will be standard throughout. So if you notice, variable manufacturing overhead rate per unit will be the same throughout, but it will change according to number of hours. So you will get different in terms of total variable manufacturing overhead according to quarter, but you will get the same amount of fixed manufacturing overhead throughout the quarter, 48,000 throughout. So then you will get the total manufacturing overhead by taking variable manufacturing overhead plus with fixed manufacturing overhead. That will give you the total, and then you just minus the depreciation if you're given that information. That will give you the cash disbursement for manufacturing overhead. Why do we need to minus the depreciation? Because depreciation is a non-cash item, so we need to take that out so that it will give you how much money that is really involved for you to bear the manufacturing overhead. So the calculation is given to you. And the last one is the selling and administrative expense budget. So most of the information will be given to you according to quarter, and you just need to list all these, and that will give you the total expenses of the respective quarter. So you only list selling and administrative expense items only. So you might be given a long list of the expenses, but you don't put everything. You only list things that are related to selling, things that are related to administrative expense. And that's all for now. Thank you.